Hey everybody, welcome to Trading Capital's Daily Analysis video. Start it over. Hey everybody, welcome to Trading Capital's Daily Analysis video. Today is currently July the 27th. Jumping right into the indices here, and we'll talk about some individual stocks. The market price action today saw a heavy reversal. The S&P 500 made new 52-week highs, hitting that 459 level. You can clearly see right into this pivot zone over here, super extended. Not only are you extended from the daily 20 moving average, which has been your last pit stop of support for your last two major bounces to the upside, but when you look at this on a weekly chart, this weekly chart is just gone super parabolic, and you should see some cooling off in downside price action. The importance of this daily candle is that it's an epic bearish engulfing candle. You gapped up, made a new 52-week high, sucked in new people chasing this rally higher, and then it reversed and completely engulfed 1, 2, 3, 4 days of price action on heavy volume, 91.75 million shares. So your next level of support based off of this heavy reversal likely means we're going to test this key 444 area. I would mark that on your charts as the next minor support, and then you have some intermediate support sitting at 437, but ultimately I think the 50-day moving average is going to be your next big test for the market to really see if this is going to be a deeper correction or if this is just a smaller sell-off in a larger uptrend. My overall thesis right now is we will get a technical bounce at this level, but will it last is yet to be remain. I'll have to judge it based off of where yields are, what economic indicators are doing and saying, and overall what the US dollar and currency markets are trending. On that note, let's jump over to the QQQ. So today the Qs saw a heavy sell-off as well. Notice the relative difference between the Qs and the S&P 500. The S&P 500 made new highs, showing that the broader market was trending higher. There was a lot more breadth coming in, but the QQQ did not make new highs despite the jump in Google, despite the jump in Meta, despite the strength in NVDA. So definitely some relative weakness in the QQQ, NASDAQ tech heavy sectors, and the 100 mega cap stocks. And when that weakness and when that becomes more relative weakness for the market instead of a relative strength, when the NASDAQ starts to lag the S&P, that's never a good sign in my opinion. You also got 63 million shares on a big time reversal. The only downside about the Qs is that you did not fill this technical gap to the upside, which leaves us slightly unsatisfied. However, that could now constitute a bear gap reversal, so we have to watch out for that. Notice that the QQQ is sitting pretty much almost at the 20 daily moving average, but the S&P 500 is still well extended from the 20 moving average. Looking at the Russell, a bearish breakdown in the IWM at this point. You got a heavy reversal, bearish engulfing candle, a little bit of a new 52-week high in this trend, and basically you're now trading at resistance. I still think the Russell's going to check back to this gap fill before we get a little bit of a minor bounce. You can see we're really struggling at this wedge pattern. You have your high to your high to your high, and right now this is you have to be very cautious at this level because it could be a nasty weekly bearish engulfing candle forming. So the big question is, will we get more downside? As of now, this is a nice weekly topping tail. It is a daily bearish engulfing on the small caps, which shows you that there's selling taking place across the broad market. Let me just put this into perspective to show you what transpired today. So if we look at this heat map, and it's a little bit distorted and cut off, so let me try to adjust this. But regardless, the heat map right now is definitely showing major selling today. It was a broad market sell-off in today's price action. If I just narrow the screen, just bear with me for a second, you can clearly see it was pretty much a broad market sell-off. You had strength in Meta, and you had strength in Google, a little bit of healthcare strength, but every sector today was down except for communications, and XLC is so heavily skewed in favor of Meta. And it's very surprising to see Google up, strong, in the last few sessions, Meta up strong, and the markets are still reversing off of these levels. So some serious selling pressure did take place. Now, this is just the daily chart of the actual stock heat map, the S&P 500. When you look at the weekly, you still see Google's up substantially. Meta on the week, even with the big gap up, is negative. That's a very interesting divergence. Even with a strong gap up on earnings, this impeccable earnings beat and results, Meta on the week is still negative. Be mindful of that. Take a look at the heavy hitter Microsoft, also deeply negative on the week. Apple just turned negative on the week. And NVIDIA, even with NVIDIA's strength today, it is still down minus 1.3% on the week. You can clearly see the strength is in health technology and then your energy minerals. And tomorrow, we actually have some pretty important earnings tomorrow. We have XOM, ExxonMobil. So they are a mega cap company that will be very, very important for the market. Let's just take a look at that chart right now, and then we'll discuss oil. So XOM has been putting in this very choppy range. I wouldn't call it a bear flag because it's sloping downwards, so it's almost like this bearish wedge pattern right now. You are trading underneath the 200 moving average, and what's interesting, there's a divergence right now. So XOM is very, very tied to the price action of oil, and one thing I'm noticing here is the daily 200, this blue moving average. Take a look at where XOM, it's well under the daily 200 moving average, and then you look at the price action of oil. Oil is actually above its daily 200 moving average, putting in this nice healthy sideways consolidation to move higher. You did get a positive price action in oil today, which leads me to think that it's going to go higher, but you can't really just jump on the energy trade after a big whopping move. I mean, in the last few weeks, we've had a 1, 2, 3, 4, 5 week surge up in oil, 5 weeks consecutively, which obviously isn't going to bode well for inflation. But then when you look at the US dollar, the dollar is potentially putting in a major bottom to move higher. Today's saw an epic reversal from the dollar off of stronger than expected housing and economic data, and that sent the dollar bullishly up higher, and it's looking primed to continue to test the 50-day moving average. If the dollar tests the 50-day moving average, I think that oil may get rejected at that key level. And arguably, if oil starts to break out and trend higher, that's going to be super, super terrible for the headline CPI number, considering the energy side of the inflation CPI calculation has been really the main mover in sending it in a downtrend. Overall, also what happened today, we had the Powell hike yesterday, yields fell, and then yields are right back up today. So it just seems that every time yields take a little bit of a breather, they're just shoot right back up. And the 2-year yield, the 10-year yields, all end of the yield curve went rallied today, and this looks like it wants to test the all-time highs here in the cycle. This cycle, not the all-time high, but this all-time high cycle. So I think that we could get a 5% pierce again, and then that's when things really, really get interesting, because that's where you saw banks started to fail. You know, banks started to fail over here, and certainly it's going to be wild, wild west out there if yields continue to push higher, because again, the Fed can't control the short end here. They can jawbone as much as they like and be hawkish, but if this starts to increase past their Fed fund rate, that's when they are in super, super trouble. So just be mindful, yields are in a very technical uptrend, and it's been trying to sell off past this daily 20 moving average for quite some time in the last several days, and it just doesn't want to break down. Let's look at TLT to see if that is a buying opportunity. So TLT is inverse of the 20-year yield. This is a bond play, buying 20-year bonds. You can see TLT is basically now trending right at the low end of the range. So the last 1, 2, 3, 4 times that if you've bought this range, it was an epic, epic bounce level. I mean, you had a pretty terrific, easy bounce. And let me just be clear, the bond market, you know, when you get 4 or 5%, 6%, 7% moves in the bond market in a week or two span, that's some big, big money and volatility. The bond market is still the biggest market out there, and it's not a good thing for it to be volatile. Now, why do I think that this is going to potentially trend lower and break this area? Although it's been support, I'm seeing a very key technical gap fill at 94.59 on the 20-year bond play over here that I think needs to be filled. I think people have been trying to chase this breakout, thinking that inflation has been tamed right off the hop, and I just don't see that yet. I still see the realistic prices out there as a consumer, and the headline CPI is certainly not something that I'm believing and buying at this point in time, because I know how much all these goods and services cost and keep progressing higher and trending higher. So I know it's skewed, and that's certainly what the bond market is telling us. I mean, if you factor in, again, I've touched base with my members on this very specific point. If you factor in the fact that inflation at at the low end of this tightening cycle was 9.1, and basically we hit a low of 3%, 3.1%. Why are yields pretty much at the high end of the range here, as they were like inflation is still at 9%? That is the big question that one has to ask, and that is the big question that the bond market is asking right now. Are they believing the Fed pivot? Are they implying a Fed pivot? Well, right now they're certainly not, and we'll just have to wait for more candlesticks to form, because if this technical uptrend continues, we're going to likely push higher in yields, and that certainly wouldn't bode well for the market. You saw a big reversal in KRE, which I am shorting with my members, full disclosure. You saw a big reversal in IWV, which I am shorting with my members. And basically, there were a few other interesting plays that we banked today. One on NEO, which was lovely, a day trade, called it out on my Twitter feed, and definitely gave you 3 sublime opportunities in my Twitter feed. I called out NEO as a short pre-market. We got it off at 14.10, our short on NIO. I also called out the KRE short, the spider short. So as day trades, just check in, peep at my Twitter feed, because I'll try to post entries and opportunities if I see fit and if I'm taking them. But look at NIO, trying to break out, basically testing these 2 major pivot highs in a very extended state. And you saw an epic reversal. Now, doesn't mean it can't go higher, it just needs to consolidate. Nothing is wrong with this pattern right now. It's still in a technical strong uptrend, but it's just a little overbought on the daily chart. All right, let's move along. Since we touched base on the dollar, obviously gold got smoked today. Take a look at this bearish breakdown. So you actually closed below the 50-day moving average. Well, technically speaking, you still have an hour left on this charting time, but needless to say, gold saw a nasty reversal. And what I'm looking for is this head and shoulders pattern, intraday pattern that has triggered. So you can clearly see your left shoulder over here, your head, your right shoulder. That pattern has triggered. Just a quick downside measurement of this pattern takes us to about 1915 on the charts. So mark 1915, that's going to be your next big level of support, and that's where it should see a little bit of a technical bounce in the near term. And that likely means that if gold flushes down to this 1915 level, that probably means that the dollar, the DXY, is also going to basically test the 50-day moving average. So it's looking very probable that that is going to happen. Also, the DXY is going to test a retrace of this head and shoulders neckline, which triggered, never completely fulfilled. But needless to say, if you get a close back above that, then it negates that pattern, and this could be a bullish reversal to the upside. We have to really wait. So we touch base on oil. Oil's obviously at some resistance. If the dollar continues to trend higher, it's going to put pressure on oil. Let's take a look at natural gas. Natural gas saw a deep sell-off today, which was interesting to see. But yet again, I think it's still a good buying opportunity for anyone that hasn't entered. Natural gas tested. I'll just bring up my trend lines here. But natural gas tagged that 50 moving average. I was watching this breakout of this head and shoulders, inverse head and shoulders pattern, and you pierced that level. We were buyers at the 50 daily moving average of BOJ, full disclosure, and basically you got a nice little technical bounce. Now the big question is, will it stay above these 2 trend lines? You can clearly see you have your upsloping support and you have your retest of your breakout trend line. So it's going to be key. I think the weekly close is going to be very important for nat gas. The interesting thing about this is the decline happened on the inventory number, and the inventory number actually showed a less than expected build in the inventory. So it was a small miss in the build, but needless to say, generally smaller builds mean positive price action. So maybe this was one last little shakeout before the fake out. And one reason I say this could be a shakeout is if you keep looking at these natural gas stocks, AR, which had a technical daily breakout today of the daily range. Full disclosure, I am long AR, but I'm long AR down here at 22.58. But needless to say, I touched base on this. There were 1, 2, 3, 4 major zones that AR previously bounced and broke down at, and now you were testing and consolidating above those zones, and we finally got that breakout on earnings. And what I was surprised about is AR finished up on the session 3.5% in a very weak market, and it was also on an earnings play, and it was when the underlying commodity was declining. So you had the market trending down, you had natural gas down quite substantially, but AR was trending. The easy solution, I think the easy call for AR is to test the daily 200 before it sees this next resistance. It just so happens to be a major gap fill sitting at around 27.77. But basically the high end of this range, if you just draw your trend line across and you basically take a range average that it was trading in, now that it's broken out of this range, this could have legs all the way up to about $29 on the charts, which would be a pretty impressive move for AR, I would say, at the very minimum. All right, let's move along to Bitcoin. Bitcoin saw some heavy selling. It was trying to hold up, but it's putting in this bearish consolidation on the 50 daily moving average. It looks poised to break lower. Bitcoin is not looking positive right now. You can clearly see there's a few resistance trend lines. You've broken this uptrend here, and now you're consolidating below it. You've hit the 50 moving average, had a very weak bounce, and now you're almost seeing another reversal that should take you down to this low 27,000 or even the daily 200 MA. I think Bitcoin is getting ready for another dump. Anything can happen, but I do think it's very close to seeing another leg lower, in my opinion. If you're shorting Bitcoin, simply use the neckline as your stop loss or a close above this red bar high sitting at just above 30,000. None of this is financial advice. I do have a small position shorting Bitcoin, but at this point in time it's a very risky and volatile asset, so you have to certainly be very careful if you play in the game of crypto. Let me just see if there's anything else I can touch base on. We sold our snap at the high of 10.95 today. Full disclosure, that seemed to be a pretty good sell. I know there's a few stocks that I am looking at on the long side, just to touch base on some of them. Let's see here. Just bear with me. So one stock that I'm impressed with, and actually I'm looking at re-entering Snapchat. I sold again at 10.90 in the 10.95 in the pre-market, I believe it was, and Snapchat had a big reversal down. But again, if Snapchat tests this low or retests this double bottom at around $10, I would look to maybe enter with a very tight stop loss on this trade, because Snapchat right now has still technically broken out of this downsloping trend line, and it really hasn't confirmed and broken below that key breakout zone. Right now it's just a simple retest, and we need more data to see if it's going to continue lower or bounce from this level. Historically speaking, if you map out Snapchat, and it's had these big drops on earnings. Over here it had a big drop, and then it ended up rallying. Over here it had a big drop, and then it ended up rallying. So technically speaking, every time you've bought Snap over the last few earnings after a big drop, it's had an epic rally. So it's definitely a bounce potential, but with the market at lofty levels, and if the market starts breaking down, it'll certainly pull Snapchat down as a whole. What I found interesting today is that Meta NVDA pulled substantially from the highs and is actually still negative on the week. So even with the big gap up in Meta could not hold the new 52-week high. It did fill that beautiful gap sitting at around 323-ish, give or take. So that massive gap where it gapped down substantially has now been technically filled, and this could be the cycle high in Meta. This could very well be a top in Meta. I'm looking to take puts on this, personally speaking, but not yet. I just want to get a few more days out of the way, but it's not healthy that Meta couldn't hold the highs of this chart and stay above this previous high, and especially since now Meta is negative on the week, even with its good gap up today. Google, interesting enough, Google looked like it was trying to break lower past that level, but it managed to still stay above this previous pivot. So notice the strength in Google staying above its pivot, but then when you compare Meta could not hold its pivot. So if you were looking for maybe a pair trade in the communication sector, the pair trade would be to maybe short Meta and then go long Google of mega caps. That's kind of what I'm thinking and where my head is at, considering that the relative strength in Meta is not there. It's just a little bit more technically overbought, and it looks like the relative strength is in Google, since Google managed to hold its high pivot. On that note, I know I'm just going to scroll through some of the other earnings tomorrow. We also have Procter & Gamble, which saw an epic reversal today. PG though is on watch for a breakout. This is another one that I do like on the long side, but again, just very risky on earnings. If we got a big dip on earnings, I'm a buyer. I'd love to see it dip down to the daily 200. That's a big ask, but you never know with earnings. Crazier things have happened, but certainly PG is one that I'm keeping on the radar. You also have AstraZeneca, Sanofi, AON, Chevron, Colgate. So some household names that are going to be very important, specifically around their guidance. One stock I'm watching very closely on the long side, I haven't even given my members this stock yet, but is DuPont. So DuPont extended on the daily, which is okay at this point in time, but DuPont had this head and shoulders pattern, which it triggered and then it reversed. So this is a failed bearish pattern turned bullish. And the biggest moves come from these failed patterns, so we should see more upside in DuPont. But one thing I'm looking at on the weekly chart of DuPont is not only did you have this beautiful reversal, but take a look at this key trend that we're trying to break out of. So I can see that we're testing this potential neckline of this weekly inverse head and shoulder. So you have your left shoulder, you have this big head, and you have your right shoulder. Now you haven't triggered, so this is something that we have to be very careful of, is that we have not officially broken out. Now one could say we have broken out by using this key trend line over here. If we get a weekly close, you could potentially play this on a retrace back down. That's what I'm looking at. Let me just make sure earnings are out of the way. The only thing about this pattern is that earnings is coming up, so we just don't know what that's going to do for the stock. But I think that as long as you stay above this key neckline, any pullback in this name could be bought. And let's just say that this pattern does play out to the upside. You know, the upside move of this particular pattern, you know, you're talking about a 50 move, you're talking about a 30-point move from this neckline. You're pretty much testing the all-time highs here. So that would be a pretty impressive move if DuPont can get that, and I'm certainly watching this on the long side if it can maintain this weekly bullish close. On that note, thank you all for tuning in. Please give this video a big like down below. Subscribe to our YouTube channel. Check out our website if you want to know more about our trade issues and alerts.